Hey, what's going on, guys? It's your boy CP. In this video, I'm going to show you guys how to take a trade step by step. This is going to be a quick, short 3-4 minute video because we do have the gold room, we do have our intraday and scalper channel, and I want to make sure that you guys are just aware on how to take trades effectively and follow. Right? Number one, most of our trades, whenever we're buying or selling in the market, are going to be 1 to 2, 1 to 3, 1 to 4. Right? We're never doing 1 to 1, which is your risk reward ratio, right? Our main goal on scalps is approximately 50 pip stop losses or 100 pip stop losses because our target is either going to be 100 pips, 150 pips, and 200 pips is what we call our banger trade setup. So if we're risking 50 pips for 200 pips reward or 50 pips for 150 pips reward is a 1 to 3. Also, one of our rules, and I always break down and I break this down as I go through this video, is after 20 pips on our scalps, we are moving our risk management to break even so that this is now a risk-free trade. Even if the trade comes back and hits you out at break even, you can get back in the trade. And a lot of time, myself and other traders will give you guys those updates when they get back in the trade, right? So if your trade is already up 20, 30, 40 pips or points in profit and you're in profit, move your entry to break even by hitting the break even button, and that is now a risk-free trade, especially as you start to use higher lot sizes, meaning you're playing with a little bit more risk of capital. We want to make sure the reward aspect is super beneficial as well. Also, in addition to that, a lot of times the market is moving, especially between the 3 sessions that we trade between Asian, London, and New York session. So sometimes the signal may just pop up and say, hey guys, buy gold now, right? Unless it's coming from our algo or our scanner that has it structured. Sometimes the signal might have to be just, hey guys, buy gold now or buy at this level, right? Because it's important for you to be able to see the alert and get on the chart. The parameters may drop later, but the parameters should always be a 50 pip stop loss or a 100 pip stop loss. We don't do 150, 200 pip stop losses. No, at that point, that's a different style of trading. Now, on our swing trades may be up to 150 pip stop losses for a 4 or 500 pip reward, right? So, of course, you'll know when those swing trades are and the difference between intraday, scalping, and swing trades. Most of our traders are going to be scalp trades and intraday trades, so you're able to benefit and capitalize between each session, aiming for anywhere from 100, 200 to 300 pips per session. Here's a perfect example, right? So sometimes this says XAU USD sell setup. It may say XAU USD buy setup. This will tell you the entry level, stop loss, take profit 1, 2, and 3. This is what our algo would send, right? If I'm sending a trade or one of my other traders are sending the trade, it may say buy gold now or sell gold now, right? And our parameter may be, let's say 4100 to 4103 is our zone. You should already know risk management wise 50 to 60, 50 to 100 pips would be your stop loss. So you would use your risk management between 1 to 3% for that specific trade. I also walk you through our Telegram so you can actually see what this looks like. And I also have another video that shows you, what we look at in the market, right? But just keep this in mind. Super, super simple. As long as you follow these rules and directions, you will have no problem. All right, so just continuing to showing you from what we showed before, let's look at this exact same breakdown, but on the chart. So obviously we took this trade earlier. I've shaved off profits, right? If you notice on your trade locker, you'll see a button right here that says partial position close. Obviously, I've closed out 90%, 99% of this trade, and I've only left this one position running, right? So if I was to hit close, it would close out the trade completely, and I'm no longer in the trade. But we're not going to do that because I'm obviously documented. I want to see if this can give us up until 4,100 and give that would be about 800 points on that one trade, which would be considered a swing trade setup, right? Now, obviously you'll go here and you'll be able to see your closed positions. Not bad for today, right? You'll see your pendings and of course your current positions, right? I use this tool right here, which is your position tool. If I'm looking for buys, sometimes I'll send a chart setup like this. And let's say it was at 4045, which is right here. This would be the entry. If it's a buy, meaning that I'm aiming above, this is what that looks like. And then this is my stop loss. So remember I told you most of the stop losses I use are going to be at a 50 pip level. So from here to here, this would be the most amount of risk I'm risking, right? 10 points, 0.247%, right? 100 pips. And if I'm aiming, my target will be, my main target for that 1 to 2 would be here. This is a 1 to 2 risk to reward. This is what it looks like, for example. So at this area right here, this would be my entry. And sometimes the entry may be, let's say, 4074 to 4071, right? Because the market's moving when we're sending the trade. Your stop loss, which is this number right here, 4065. And then we have our parameters aiming up. So our bang TP, right, which would be here, would be 4095. Right? This is the full completion of the trade. After the trade is in a range, let's say 20 pips, so from 474 to like 476, this now changes from being at risk, and I would bring my stop loss up closer, right? So now this is only 47 pips worth of risk versus 100. On our swings, or if we're looking at 150 to 200 pip stop loss, it will look something like this, right? Aiming for at least 400. So risk reward factor is super important, 1 to 1. I'll also show you this on the chart. For example, this trade right here. Our stop loss was 60 pips. This is where we entered the trade, right? And what I say entry could be? Entry could be like buy gold now. And psychologically, you should already know your stop loss needs to be anywhere from 50 to 100 pips. This one was right below our key level at 40.19, and this was a snipe entry. From 40.23, price pushed up. And once price passed from 40.23 to 40.26, 30 pips right here, right? 316, but that's really 30 pips or 31 pips. We moved our risk to risk free. Now, if price came back down and hit that level, we would look for another entry, right? But that's important about risk management, right? In order to catch these moves, you have to have proper risk management. And then what I'll do is I'm also going to show you this on Telegram as well, because sometimes, like I said, it's important for you to understand that these trades can pop off fast. So if I was to have to type this, right? Let's say I had to type this. Buy gold 4038, 4035. Cool. That's normal. But now imagine if I had to type stop loss. Let's do 430. Risk management, 1%. TPs, let's say 44. TPs, 4048. The time it took me to type this, that trade could have already continued to leave as you see what was happening right here. Right. So I'm trying to make sure you get the best entry as possible, right? And I'm making sure you're in the best scenario as possible. So if I have to spend time to type it out, cool. Now, sometimes I'll send the trade with those parameters, right? But it would be like right here. So price would have to come back to this level, and then all you can do on your broker is set what we call a buy limit. You would change this to limit. You would choose the number, your risk. You would choose your stop loss. TP is your take profit, or you can choose how much you're willing to risk per trade. And that's pretty much simple and makes it easy when it comes to trading and taking our trades. And of course, our algo will send trade setups fully like this. But a lot of times, me and my traders, we're sending you either buy gold now, sell gold now, or buy gold by market, or sell gold by market. And just of course, if you don't know this already, XAU USD is gold, right? And obviously, buy means long and sell means short. So sometimes terminology that could be a little bit different, just so you guys are all aware and on the same page. All right, perfect. So now I'm going to show you from one of our group, our signals, which is our gold room, what it kind of looks like when I'm sending out a trade, right? Or someone on the team. See, sometimes the trade will come from the Intraday Scalp Community, and it'll look like this. Hey guys, XAU is a pair, direction buy if it's a re-entry trade. Okay, once it's in, boom, close higher entry, leave bottom entry. We'll give you updates once it's 30 pips in profit, 50 pips, 70 pips, right? 100 pips. And obviously anything after 30 pips, you want to make sure you move your chart to break even, so it's a risk-free trade. Or you'll see like buy by market, right? Hey guys, buy XE by market. Cool, you already know your parameters and your stop losses. So just when you see a signal, it doesn't necessarily have to mean it's going to be fully written out. And as you can see, a lot of our trades, we try to snipe the perfect entry, right? And of course, we document it and show you guys, right? So we're in these trades with you guys on the same accord and frequency. See, you notice you see this trade set up here, buy, boom, right? And this is during our London session. Now, let me show you another example. And look, we do take a lot of trades. If the market is moving, the market is moving. Okay, perfect. Another one. XAU buy direction. This is our range. So entry is between this range and this is our stop loss, right? This is a intraday trade, right? So we give you the stop loss, meaning that if price comes to this level, the trade should automatically close out, right? But you shouldn't let the trade run without a stop loss, right? And then this is a zone where your first entry, you can also add an additional entry, going forward. And that is how we were able to capture this trade literally earlier yesterday. Look, July 7th, right? So I'm recording this video just to make it because the market is going to be moving and we're going to have this exactly was a trade right here. And that was the start of the Asian session. So we trade these 3 sessions so you're able to kind of dissect everything and just be on point. So you now know how to take a trade, how to read the signal. And then of course, sometimes you'll see the trading view chart with actual markup and parameters if we're waiting for a level. But if it's not there, it's not there. Or I'll send a voice note breaking down what I'm looking at, pretty much. And like I said, every trade will give updates, right? So once you're in the trade, you never have to wonder like what's going on. And of course, your stop loss is your stop loss. So always make sure that you're following risk management. And of course, if you're stacking your entries, make sure that you're keeping in mind to keep those higher entries at break even. And of course, ranging your stop loss. So like for here, I was already in the trade. And then of course I added more entries as price continued to push, right? That's one of the strategies you eventually learn. But until then, don't rush it. Like I said, 1 or 2 entries is perfectly fine, right? Following our parameters, and we're going to win more than we lose regardless, right? This is an example. Look, buy XAUSD by market. This is the level, the stop loss is only 70 pips, right? This trade went on and ran 50 pips, and then we secured partials and they broke even. But then we bought it again, and then it ran 30 pips, 50 pips, 70 pips, right? We said hold, it ran 80 pips. This is this trade, right? Boom, first position running 90 pips, and we sent a re-entry, well, not a re-entry, additional entry. Look, buy again, same level, move to break even, 30, break even hit. Boom, 2 minutes later, re-entering. So this is why break even is important, because we don't want you to lose capital. We want you to preserve capital. So you want to make sure you can keep on top of this and stay at that accord. And I say, look, I know break even is annoying sometimes, but it's there to protect us, right? So this is what I want you guys to understand when you're taking these trades. Look, next level we're targeting, and boom, look, buy now, right? Update a minute later, sniped. Came right to the level, pushed 50 pips, 421 entry hit, 60 pips, 80 pips. This was spot on, right? And this ended up becoming 100, 120 pip, 140, 160 pips. Once you start to see that, boom, 200 pips, right? That's a banger. And then look, an hour and a half later, we're back at it again. So this is how consistent and frequently we're trading. So even if you miss a trade, there's always going to be another trade, right? So I just want you to keep that in mind. Look, buy gold. This might be the level. Boom, update. So don't expect the stop loss. You should know your stop loss and you should understand your risk that you're assuming. And based on your risk is going to determine your reward, right? So risk what you're willing to risk. And of course, wait for the reward to come through. So I hope this entire video was helpful. And I'll see you guys in the community and on the charts. It's your boy CP. I'm out.